Namaste, good morning. The first session is to focus on uh, math, okay, 115 JB computation, how we are going to do that or what are all the special features. Before that, where we started in assessment of companies is we understood the two special areas of taxation so far. One is section 115 BBD, which is exclusively for dividend from specified foreign company, and a specified foreign company is one where the Indian company holds 26% or more of the voting power. The intention of the law is to ensure that they bring back the money, okay, because you have made investment and there is a return, and that return, instead of keeping outside, if you bring it, I want to motivate you to bring it back to India, repatriate to India. So I'm giving this concessional rate. Also, had it been an Indian company in the previous in the preceding law, there was 115O DTT, dividend distribution tax, which was 15%. So matching with that rate, I was giving this rate. And then the buyback, that is the major change that happened. Buyback is now taxable in the hands of the shareholder, sorry, in the hands of the company, not the shareholder. Shareholder gets exemption under section 10 subsection 34A. Shareholder gets the exemption, but it is taxable in the hands of the company. We call it as additional income tax. It is not on the income. We all understood that this is not on the income. This is on the difference between buyback price and issue price. Issue price is well defined in the law. That difference into 20%. The one interesting factor of buyback of shares is the surcharge rate is 12%, irrespective of the level of income of the company. Even if the company is not liable to pay income tax, they are paying surcharge. Before going into understanding the math as such, I want you to understand two other provisions which is not restricted only to companies. I'm not saying that these two provisions are only for companies, but it is essential to understand it here before progressing to math. The first provision is section 115 BBF, royalty income for patents developed and registered in India. Okay, royalty income for patents developed and registered in India. Let us understand this. Let us understand this. This is for development of what do you call inland patents or registering it with the Indian law. I want to give them a concessional rate of taxation. Again, when we do international taxation, I will relate it and show you why it is concessional rate of taxation. So in this, they say that the patent should be developed and registered in India. You will understand registered in India. It should be registered under the Indian patent law. What do you mean by developed in India? 75% of the expenditure for development of that patent should be incurred in India. Repeating, when I say developed and registered, the second part is simple. The first part, what do I mean by a patent developed in India? 75% of the expenditure should be incurred in India, then it becomes a developed patent in India, registered under the Indian patent law. The royalty income you get is taxable at 10%, section 115. So you can understand concessional rate of tax. It is taxable at 10%. But no expenditures will be allowed as deduction. Okay, no expenditure. 115 always has this, that expenditures will not be allowed as deduction. So, applicable for all assessees who is a resident in India, a true and first inventor of the invention that has been registered under the Indian patent law. Okay, this is for all assessees. I'm not saying only for companies, though I have put it in assessment of companies, but this is for all assessees. The term royalty means consideration received for transferring all or any right in respect of a patent or knowledge transfer, importing knowledge which is know-how, etc., and use and rendering of any services. For availing this concessional tax rate benefit, the patent should have been developed in India, which means at least 75% of the expenditure should be incurred in India. At least 75% of the expenditure should be incurred in India. And the rate of taxation is 10%, no deductions will be allowed. Later I'll tell you about MAT, okay. And it is a presumptive taxation. So the 5-year lock-in period is available. 5-year lock-in period. Yeah. Yeah, that will be applicable. I am not saying that it is not applicable. It will be applicable, but you need to prove a lot of things. The Hindustan Coca-Cola Limited can register if they find something new, not international Coke. And they should prove that 75%. There is a big process for registering patent. It is not simple. And food products are in the products. There are a lot of things. Okay. The next section is for environment friendly, for avoiding global warming. Okay, carbon credits, that is those industries which emanate lesser pollution. Okay, they will be given a certificate which is tradable, and whatever is the proceeds will be taxable at 10%. Carbon credit, incentive provided to industrial undertaking who reduces emission, gets the certificate where the total income includes income from traded certificate. It is taxable at 10%. Okay, expenditures cannot be claimed. Both these sections are 115 BBF is a dynamic section. Many times I've seen an adjustment or a question. 115 BBG, a rare adjustment only. Okay, just read through. Yeah, can also be some asset. No, it's not. It's a tradable asset like subsidies and we'll move on. We'll move on to what is popularly known as MAT provision, 115 JB provisions. Okay, right? The small story is like this. Uh, I told you how the shift has taken place so far. Finance ministers to finance minister, okay, from a deduction to exemption to deduction to incentive for investment, like that. So when Dr. Madhu Dentavade was the finance minister, at that time, 80H தான் ரொம்ப popular. There were no 80I, there were no section 10. 80H is the most popular section. All export companies, software, that's the time they started booming. Okay, industrial belt in backward area, all these things were enjoying tax holiday benefits. Okay, these companies were making profits, were distributing that profits. Please understand. These companies were making profits. In fact, they were distributing the profits as dividend, but they were not paying income tax. Because when it comes to income tax, deductions or exemptions are being claimed. So the then finance minister said that they should also contribute something to the exchequer. When they can make profits, pay dividends, why should not they pay? So they brought in at that time minimum alternative tax. Instead of paying the normal tax, which was somewhere around 40%, and for a private limited company 45%, instead of paying normal tax, pay minimum alternative tax 10%. When it was introduced, it was 10%. So at that time, calling it minimum is correct. 40%, 10%. Now calling it minimum is injustice to English language. Now you call it alternative tax. I have no problem. You don't call it as minimum. At that time they named it, which is right. Now the difference is 10%. Okay. Right. Fine. Book profit. Yeah. Then when Dr. Manmohan Singh came, he abolished VAT. He said a promise is a promise. When I say I will not tax, I will not tax. MAT went out. MAT was originally introduced by Dr. Madhu Dentavate, 115JA. Manmohan Singh abolished it, saying it's a promise. I will not do that. You need not pay tax. When Mr. P. Chidambaram took over, he brought it back. Nothing wrong. He said that you should contribute minimum to the. But it is always testing our memory power. So he thought people will not know that there was a previous law, and he brought it as a new law. Instead of reviving 115 JA, JB was introduced. So what? அப்படின்னு நீங்க கேட்டீங்கன்னா ஒரே ஒரு ப்ராப்ளம் தான். Now anybody reading the law will first read credit, then the law tax. Normally 115 JC, AMT, 115 JD tax credit to be carried forward for 15 years and adjusted against normal tax. But 115 JB, minimum alternative tax. The tax credit on minimum alternative tax, the difference between MAT and normal tax payable, can be carried forward and set off in 15 years. Is not after JB, it is before JB. It is JAA. Why? Because 115 JA was there, 115 JAA, the tax credit. The tax credit period was not over. So we reintroduced this provision. Instead of reviving 115 JB in JA, we introduced it as 115 JB. So a reader of the law now in a chronological order will first read the credit and then go and read the tax. But he thought it is a new law. People would have forgotten without forgetting. By forgetting that there was a mistake in the previous section. So fine, right? So JB was revived. Now it is 15%. Probably when you started your articles or just before that, it was 18.5%. The normal rate of taxes 25%. The minimum kadayadu. It is not right to call it as minimum alternative tax. Alternative tax regime. Okay, right, fine. What are all the qualities of what? So this was revived and brought into. What are all the things? 115 JB will be computed on book profits. Repeating, 115 JB will be computed on book profits. Profits as per books of accounts, not as per income tax law, as per our Schedule 3. After making some adjustments. After making some adjustments, the profit will be arrived at. On that profit, 115 JB will be computed. Is the book profit. On that, MAT will be computed. But again, it is a definition-based format given in the law. It is a definition-based. Why I am making this clear to you is, you cannot include or exclude an item. It is not a circular or a notification. It's a definition as a part of law itself. No. 115 JB is a definition given in the law which says taking the profit as per annual accounts. What are all the additions and deletions to be made to find out the book profit which is coming under MAT? Okay, so we studied AMT. AMT is computed only in 3 cases. I asked you to remember 3 cases. It is for a non-corporate assessee. 1, if you get exemption under 10AA. 2, if expenditure under 35 AD is claimed. 3, deduction majorly under 80I is claimed. I asked you to remember AMT. That is also a definition. Okay, you cannot have any. Here also it is a definition. Okay, there it is 18.5%. The tax credit provisions are the same for both AMT and MAT. Okay, how to compute MAT? What are all the additions and deletions? Okay, I want you to write it once, though the format is there. Okay, I want you to write it once so that we are very clear how to understand this format. Basically, the law ensures one thing. Okay, accounts has to be prepared as per Schedule 3 of the Companies Act along with applicable accounting standards. Okay, accounts has to be prepared as per Schedule 3 of the Act along with applicable accounting standards. If accounts is not as per Schedule 3, the income tax officer can reject that accounts. Okay, can reject that accounts. He cannot go ahead and prepare. Okay, so accounts needs to be prepared as per Schedule 3. Now, as I told you, 115 JB, it is better to understand. Okay, my dear friends, margin space as it is, let it be there. I want that margin space, and the other space divide it into 2 columns, a center line. Okay. Okay, format for computing book profits under 115 JB. Okay, once more, okay, and what is the basis of this format? Net profit, okay, as per schedule, as per financial statements prepared by applying all mandatory standards and in the format of schedule 3. So this is the first requirement. Okay, have the margin space. I need that space also. So some items we are going to add, some items we are going to delete. So split your notebook page into two columns: addition, deletion. Easy to remember this will be. Okay, shall I? First, what are all the things to be added? Okay, we will add any transfer to reserves. Any transfer to reserves will be added back. Any transfer to reserves will be added back. Okay, interim and proposed dividend if they are debited to P&L. Okay, I can write it as addition if debited to P&L, and similarly deletions if credited to P&L. Interim and proposed dividend I will add back. If it is debited to P&L, I will add back. Provision for income tax and all other aspects of income tax. Provision for income tax, advance tax, income tax paid, interest on income tax, all these things will be added back. All these things will be added back. Deferred taxes. Deferred taxes. Okay. On transfer to reserves should be added. If it is debited to P&L, then transfer from reserves should be reduced. Transfer from reserves should be reduced. Similarly, deferred tax debited, income tax credit deferred tax debited, newly created should be added. The reversal of deferred tax. So this will come in both the places. Deferred tax. This will come in both the places. That is, both it can be a debit or it can be a credit. Why debit? If it is created. If there is a reversal of a deferred tax, it will be a credit, in which case it will be delete. Am I clear to you? Friends, in the margin space, to easily understand this, we call it as appropriations. We should add back all appropriation and reduce the appropriation. Repeating, all these 6 items, okay, are nothing but we, in accounting terminology, we call it as belonging to the owners, appropriation. Okay, so the 4 items to be added and 2 items to be reduced. Next, I am going to talk about provisions. I am going to talk about provisions. What needs to be added? Okay, again, if it is debited to P&L, okay, provision for contingent or unascertained liability. Provision for contingent or unascertained liability. I also want you to put an asterisk mark over that. I will explain to you at the end. Provision for contingent or unascertained liability. Provision for loss of subsidiary company. Provision for loss of subsidiary company. Provision for diminution in the value of investment. Provision for diminution in the value of investment. My dear friends, Accounting Standard 13 on investment says, in case of long-term investments, if there is going to be a permanent reduction in value, provide for it. Okay, that is what it is. If you remember PGBP, we did a question. 4,80,000 as per government directive, the investment has been reduced. But that is a contingent provision. So it needs to be added back. So these 3 things are provisions. Am I clear to you? Okay. What is the purpose of introducing 115 JB? Yeah, because companies were enjoying exemptions or deductions. So the next set is the most important thing is, I don't want to give them exemption. What type of exemption? Not all exemptions. Not all exemptions. I don't want to give 10 AA. Depreciation is different. Exemption 10 AA. I don't want to give them 10 AA. Or in the sense, those who are claiming 10 AA, let them at least pay a minimum tax. Okay, that is the intention with which the next set of things are going to. First, I will speak the deduction side and then come to the addition side. Okay, it will be easy because I am talking about expenses which are there in the credit side which will be removed. Okay, exemption under section 10. Exemption under section 10 can be taken out. What is the wording? Exemption under section, you cannot take out 10 AA. You cannot 10 AA, I am going to tax it. I am going to tax it under 115 JB. They did not say all exemptions under section 10. Friends, if suppose agricultural income is there, take it out. I don't want to tax agricultural income even under 115 JB. Share of profit of a firm is there, take it out. I don't want to tax it. Exemption under 10 is taken out. So for your understanding, you write it within bracket. Okay, section 10 double A will not be reduced or deducted, whatever it is. Okay, that will be taxable. Only exemption under section 10 will go off. Okay, the opposite terminology is nothing but expenses pertaining to such exemption, or you can write huh? Exemptions under section 10, take it off. In your credit side of your P&L, of your company's P&L, there is agricultural income. Are you going to tax that in your 115 JB means? No, it is not taxable. So that I am finding out book profit on which tax is going to be computed. So I will remove that agriculture income. I will remove share of profit of, okay, I will remove whatever is there under section 10. But I will tax 10 AA. I will not remove 10 AA. I will not remove 10 AA. That is the sanctity. Am I clear to you? Okay, right? Now, share of profit of a firm, is it taxable for a company? No. So it is there in 10.2, it will be removed. 10 subsection 2 has that, it will be removed. Share of profit of AOP, is it taxable for a company? Based on taxable slab rates. Are you clear? Okay. Okay, I understand. Law அப்படிதான் கொடுப்பாங்க. நீ லாஜிக்கலா பேசலாமே. Individuals who does not have basic exemption. ஒரு company AOP ல மெம்பரா இருந்தா basic, there is nothing called basic exemption limit if company is a member. So AOP would have paid tax at MMR. AOP would have paid tax at MMR. Now is the share of profit taxable? No. Okay. No. Unfortunately, it is not there in section 10, it is there in 86. So, இன்னொரு line item add ஆகுது. Had it been 10.3, I would not have had this. So, I come to the next item, share of profit of AOP. Actually, law இங்க எழுதிருப்பாங்க. Share of profit of AOP, provided AOP is taxable at MMR. Obvious அது. If company is a member of AOP, basic exemption limit is not there. So AOP would have been taxable at MMR, or if foreign company is a member, such higher rate. So share of profit is a, okay. So the opposite is share of loss of, because people think 115 JB format, how to remember? It is very simple format to remember. Logically, we can understand the format. Okay, right.
Sir, one doubt. Won't we be adding the share of profit and deleting loss?
Share of profit credit la irukuma, debit la irukuma in our P&L?
Credit la.
So I should not tax it. What should I do?
Oh, subtract.
Yeah.
Okay. Okay.
Yeah. Okay. All right. Fine. Section 115 BBF. What did we study now? 115 BBF. Patents. Developed and registered in India. What is the rate of tax? 10%. Okay. Will it not be looking like a Senthil Koundamani joke if you go and tell him that you are taxable at 10% or minimum alternative rate of 15%? Do you understand? You cannot go and tell them it's a company which has developed a patent. It is a company which has developed a patent. And the company has asked, you said that in 115 BBF, if I develop a patent in India, 75% expenditure incurred, registered under the Indian patent law, I am taxable at 10%. I want to avoid that. And now you come and take 10% or 15%, whichever is higher. So it will become a little. So they said, okay, income taxable under 115 BBF, royalty income, okay, for you to understand, royalty income for patents developed in India. Okay, and I'll write it here itself, 115 BBG, that is carbon credit. Expenses pertaining to okay, like how we say 115 BBF BBG, there is a section 115A, section 115A, which we will study in international tax, which says what are all the rates of taxation for a foreign company. Okay, in your office நீங்க வந்து the 15 certificate லாம் கொடுப்பீங்க, royalty or fees for technical services taxable at 10%. Okay, yesterday we saw if a business trust, if a REIT or business trust pays interest to a non-resident, which can also be a foreign company, that interest is taxable at the rate of 5%. TDS will be 5% LBC. So 5% is the rate of taxation. Again, if you go and tell 115 JB is applicable for foreign companies also, for all companies. That's how the law opens up. For all companies, even foreign companies has to abide by. Again, you cannot go royalty taxable for them at 10%. You cannot go and tell them pay 10% or 15%. So, income of a foreign company taxable at a rate lesser than 15%. Lesser than 15%. Income of a foreign company which is taxable at a rate lesser than 15%, because that is wrong to tell them that they pay that or 15%. Okay, income of a foreign company. But I'm not stopping here. I'm telling you what are all the income, though you will understand it detailed in international taxation. Okay, royalty, fees for technical service, interest from infrastructure investment. Interest from infrastructure investment. Okay, expenses. சரி, நான் ஒரு நோட் புக் தந்துடுறேன் ஸ்ரீராம். அடுத்தது நீ பேட்ல தான் எழுதணும். அடுத்த லைன் நீ பேட்ல எழுதுவ. இல்ல இதா இருந்தாலும் அடுத்த லைன் நீ பேட்ல ஒரு சட்டம் வரைக்கும் போகும். அப்படி Okay, right? Notional gain in the income side. Notional gain on transfer of shares for units of business trust. You remember this? Okay. Yesterday I gave you the example. If Sriram, Venkatesh and Paniyappan are running a company, they want to become an SPV of a business trust. They transfer their shares and gets units. Notional gain. Books record பண்ணுவோம். Books of accounts. Notional gain for transfer of units of a business trust. Okay. Notional loss on transfer of shares for units of business trust. சொல்லிட்டேன் ராஜா. என்ன எழுதலையா? Okay, happens. அதுக்கு பேர் தான் இங்கு தீர்ந்தது. It's a technology. Okay. All these things we can call it as exemptions. So 10 items together covered. 10 items together covered. Okay. 5 of the income, the relative. All these things we together call it as exemptions. All these 10 items we together call it as exemptions. Am I clear to you? So far we have covered appropriation, which has 6 items, 4 additions, 2 deletions. Provisions, which has 3 items, and exemptions, which have 10 items. Depreciation charged in books of account. Okay, whatever is the depreciation we charge in the P&L account, debited to P&L we add back, and what we reduce, please understand. One bottom line concept of income tax law which I always ask you to remember is revaluation is never a concept under income tax law. Even if it is for your books of accounts, I am going to ignore. Okay. Depreciation as per books of account. Okay. Ignoring revaluation. Depreciation as per books of account. Ignoring revaluation. Right? Let me very clearly tell you. I am not asking you to add back depreciation as per books and reduce depreciation as per IT law. That is for my normal provision. I am only recording the books depreciation and reducing the books depreciation. But the books of accounts, as per accounting standard or as per Ind AS, will have something known as depreciation on the revaluation part of assets. I had an asset which is building, which is 10 lakhs. I revalued for 20 lakhs. Now claiming 20 lakhs into 10% as per books of accounts 2 lakhs. I will add back 2 lakh and reduce 1 lakh. I am only ignoring the revaluation part of depreciation. I am not saying reduce as per income tax law. That is only for normal provisions. Okay, right? There is one thing called, which is an old one, profits of units of sick industrial undertaking. that should be reduced. If at all it is credited, if there is a sick industrial undertaking, okay, which is coming under BIFR or various organizations, the profits of that, if it is credited, I need to reduce. For our ease of understanding, I know it is not a provision, but it is nice to write it opposite to provisions than to have it as a separate line item. So I am going back to the provisions. Okay, one of the line item you can write, okay, profits of unit of a sick industrial undertaking. Provisions easy to remember when you are reading. Profits of unit of a sick industrial undertaking. Add பண்ணலாம் அதையும் add பண்ணலாம். Net effect is revaluation should be ignored. Okay, last line item on the credit side. Okay, okay, this is brought forward loss, that is reduced, less brought forward loss or unabsorbed depreciation. Okay, and then following words are important, whichever is less as per books of account. Brought forward loss or unabsorbed depreciation, whichever is less as per books of account. Okay, not as per IT law, and whichever is less, brought forward loss or unabsorbed depreciation, whichever is less. Okay, this is the first level of the format. The format will continue. Your page, you should have another half a page, because from here, at this point, the law stops and says the next set of adjustment is for Ind AS computation. The next set of adjustments. So at least half a page I need, but up to this, have a read through once. Have a read through once. Or you can even ask Ananya, she's now very well versed in company law.
Sir, நான் தூங்குறேன். You think I'm sleeping அப்படியே கேட்காம இருப்பேன்னு நினைச்சிட்டு இருக்கீங்க சார்?
இல்ல இல்ல. I know you are listening. I know you asked this doubt also, so I know you are very much listening, and I'm very consciously again telling that நீ வந்து பயங்கர company law. Okay, right? Okay. So I need half a page. Please leave half a page, and then only we are progressing. Okay, right? I have put an asterisk mark for which you need to understand some note. That is where I am coming. How far this is right is different. But XJ4 Jingsnor case law, the court has held provision for gratuity. Okay, how do we make it? On actuarial valuation. We appoint an actuarial, and based upon the valuation certificate of the actuarial officer, we are making the provision. In that case, it is held that such a provision is not a contingent or unascertained liability. In that case, they held provision for gratuity is not a contingent or unascertained liability. Okay, so you cannot add back, is the whole point for 115 JB format, right? So I'm writing it here. Later, after the format, I will put it in the end. But நீங்க ஒரு half a page விட்டுட்டு இந்த asterisk mark note எழுதுங்க. XJ Forging's case, it was held that provision for gratuity is neither arrived at on actuarial basis is neither a contingent nor an unascertained liability.
Sir, this case law we saw for something else, no, sir? But I don't remember what.
This company's case law we saw for something else also, XJ Forging's case law, but not this particular case law.
Yes, sir.
People are very appreciatively talking about you here, Ananya. Okay, right. One more thing, okay. This is known as book profit. I have not completed the format yet. I have stopped at a one particular level. I'm going to continue. That's why I have left you, asked you to leave half a page at least. This is known as book profit. A company is liable to pay normal tax or 15% of book profit, whichever is higher. Okay, a company is liable to pay. So this is the format. I have just changed the format for your understanding by addition deletion. Okay, right. Either tax as per normal provision or whatever book profit is being arrived at, 15% of book profit, whichever is less, whichever is higher. Okay, where I am paying as per book profit, my dear friends, okay, then I can claim what is popularly known as tax credit. I can claim what is popularly known as tax credit, 115 JAA. Okay, difference between MAT and normal tax I can carry forward and adjust it only in the year in which normal tax is paid. Rate of, period of adjustment, 15 assessment year. Okay, this can be carried forward and adjusted against normal tax payable, okay, for 15 assessment years. Okay, one aspect which might cross your mind, you might have understood that, but I want to make it clear. So 35 AD adjustment is not there in 115 JB format. Why, Abdina? In books of accounts, you would not have charged it as an expenditure. Only for income tax purposes, those assets are considered as expenses. Adanalata first line, books of accounts should be as per mandatory accounting standard and schedule 3. So in books of accounts, you would not have charged it as expenditure. So there is no question of 35 AD adjustment in book profit. Okay, only for in income tax adjustment statement, you would have added back the depreciation, reduced the 35 AD expenditure. Am I clear to you? Okay, again, baby steps only, very slowly we start. Question number 1. The net profit of a company as per P&L account is 100 lakhs after debiting or crediting the following: provision for income tax, deferred tax, proposed dividend, depreciation debited to P&L which includes revaluation of assets, profit of unit located in special economic zone. Okay, which will be coming under 10AA. Yeah, good, Ananya. 10AA. Okay, right. Provision for permanent diminution in the value of investment, brought forward depreciation and losses as per books of accounts, or Okay, you should cumulate it and take it. Okay, here it is 12, here it is 10. Please in the you write it 12 10, so that you will compute book profit under 115 JB. If you think anywhere, because I want to remove one aspect in your mind and go ahead and answering. If you think anywhere that Watson is working out a question which is of simple nature, first I want to tell you this is also an exam question. This is not something, this examination question can be simple like this also. Okay, but our mind will immediately think, chacha namla final padikkurom exam la perusa dhaan eludhanum. Okay, no, not necessarily. Exam questions can also be simple. This is an exam question only. Nalla irukka, sari. Detailed answering. I'm happy you remember that. Computation of book profits under section 115 JB. Add back the whole of the depreciation charged in books. Depreciation, ignoring revaluation. 12 minus 2 lakhs. Raja? Okay. Brought forward loss or unabsorbed depreciation, whichever is less on cumulative basis as per books. So this is 12, this is 10. So minus 10 lakhs. books you have charged a depreciation of 12 lakhs, which includes for revaluation of assets 2 lakhs. Revaluation is never a concept under income tax law, even if I go as per the books of accounts. So I should allow only 10 lakhs. I should allow only 10 lakhs. So I add back 12 lakhs, allow 10 lakhs, or you can add back 2 lakhs. Clear? Clear? Question number, shall I? You want some time, Anthony? Sona Limited, a resident company, earned 15 lakhs after debit or credit of the following in the statement of P&L. Items debited: provision for loss of subsidiary company, provision for doubtful debts, provision for income tax, provision for gratuity based on actuarial valuation, depreciation, interest to financial institution which is not paid within the due date as per IT law, penalty 50,000. Okay, on the credit side, profit of unit located in SEZ. Okay, share of income of AOP, income from units of UTI, nothing but dividend from units of UTI, LTCG, compute minimum alternative tax under 115 JB. The other informations are depreciation includes 1,50,000 on account of revaluation of asset, depreciation as per IT law, balance of statement of profit and loss account in balance sheet at the asset side, which means loss, is 10 lakhs, which includes unabsorbed depreciation of 4 lakhs. So what is business loss? 6 lakhs. Okay, 6 lakhs business loss. Capital gain had been invested in 54 ECA. Okay, the AOP of which the company is a member had paid in the statement. We all know it has to pay MMR if company is a member. Okay, provision for income tax include 45,000 interest payable on income tax. Read through. I am not stopping this question with just 115 JB. We are going to do the normal provision also. We are going to do the normal provision also. Read through, please. You're right. Huh? Okay. I will write the note. Our friend wants a note for the last question itself. Note. Okay. Okay. Profit of unit located in SEZ. Okay, is available for exemption under NAA, which will not be excluded while computing book profit under 115 JB. The reason is the format doesn't allow. The format says exemption under section 10. Okay. In the note, in the question, Shall we? Okay. First, for question number 2, first we are going to work out MAT and also the normal provision. But please understand. இது exam கிடையாது. This is not for exam. Exam, we will do the 1 or 2 questions and show you. But understanding wise, I want you to be terribly clear. So I am making a particular format. ஆனா இந்த ஃபார்மேட்டை நீங்க எக்ஸாம்ல ஃபாலோ பண்ண எனக்கு ரொம்ப பயமே. You will feel this format is simple. I will carry forward it in exam. No, you cannot. Okay. என்னடா ராஜா? Computation of and book profit. ஆமா, இது உங்களுக்கு பிரசன்டேஷனுக்காக தான். This you need not do like this in exam. You should do separately normal provision separately, but you will understand it in one go how normal provision and MAT are working out. ரெண்டுத்துக்குமே base is the same, net profit as per P&L account. Okay, first I am talking about additions. Okay, profit or provision for loss of subsidiary, in both the cases you will add back. லைன் ஐட்டமே இருக்கு. லாஸ் ஆஃப் சப்சிடரி ப்ரொவிஷன்ல பாரு, ஃபர்ஸ்ட் ஐட்டம் அதான் இருக்கும். சாரி, செகண்ட் ஐட்டம். Provision for loss of subsidiary. Okay, that is the loss of that company. That company can carry forward and adjust. Our company law or the accounting standard might say that that loss, a part of the loss belongs to you, so you are debiting it in your P&L account. Both under normal provision and under 115 JB, it is removed. Provision for doubtful debts, 75,000. Why is this disallowed? It is a contingent liability. It is a contingent liability, so it is disallowed. It is a contingent liability, so it is disallowed. Okay. Provision for doubtful debts. Next. Provision for income tax. கரெக்ட் தான் பாவம், அப்படி எழுதிடலாம், இல்லாட்டி ஒத்துக்க மாட்டான். Interest in all forms of income tax is disallowed. All forms, including interest, it will be disallowed. Okay, but that is not taken off. அது liability-யோட adjust பண்ணணும். It cannot be a provision for gratuity. Please understand. Provision for gratuity. I am writing here itself. According to section 40A subsection 7, this is disallowed under normal provisions, normal computation. Correct? Okay, we all know specifically 40A subsection 7 says, specifically 40A subsection 7 says provision for gratuity will not be allowed. Specific, okay, so it will not be allowed. But when it comes to MAT, it is not added back because of that case. Okay, however, in XJ forging's case, okay, it is held that provision for gratuity is not an unascertained liability as it is based on actuarial valuation. So, in the normal case, you will disallow, but in MAT, you will not disallow. In MAT computation, you will not disallow. Depreciation, in both the cases, we will disallow. Later, while allowing, I will give you the specificality.
So, companies that don't use actuarial valuation for gratuity,
then it becomes a contingent liability.
Yes, sir. Okay.
He asked, if it is not based upon an actuarial valuation, then the treatment will be, it is a contingent liability. Only because it is based on actuarial valuation and expert valuation, it becomes an ascertained liability, not an unascertained liability. Then, interest or to financial institution not paid till the due date of filing returns. Section 43B, statutory payments. Okay, as our friend here said, it is only disallowed in the case of computing as per normal provision. Nowhere in the format they have said 115 JB is format based. You cannot add one item or reduce one item. It is format based. So, interest to financial institution, interest to financial institution, okay, not paid within due date, disallowed under section 43B, okay, it is 1 lakh.
Sir, whenever statutory payments are not paid within due date, wouldn't the law have added this also in MAT? I mean, how come it got left out, sir?
See, MAT intention is not for computing income tax. MAT intention is to make you participate by paying a lesser tax. Then MAT will also become like PGBP. MAT will be one more level of computation and 15%. So it is not left out. MAT intention is don't provide it. It's a global exemptions. அந்த மாதிரி கேசஸ்ல தான் MAT தவிர not small cases. Even this
Okay,
as an
sir.
example, penalty for violation of law. Okay, it is only disallowed under normal provisions. It is only disallowed under normal provisions. It is only disallowed under normal provisions, not under MAT. Not under MAT because the format does not support that.
Okay, sir.
profit of unit located in SEZ, assuming it is export profit, which qualifies for 100% exemption under 10AA, which qualifies for 100% exemption under 10AA. Only our normal computation you will reduce this 5 lakhs, not in our MAT. In MAT it is taxable. I want to tax it. Share income under or from AOP. Share income from AOP 1 lakh. Dividend from UTI taxable under IFOS, so I am not taking it here, minus 75,000, whereas in book profit no adjustment. No adjustment. LTCG, okay, 3 lakhs, whereas in book profit no adjustment. No adjustment. Depreciation, ignoring revaluation. In our book profit computation, 360 minus 150. Okay, 3,60,000 minus 1,50,000. Whereas depreciation as per IT law is our normal computation, 2,80,000. Depreciation as per IT law in our normal computation. Okay. Brought forward loss or unabsorbed depreciation, whichever is less as per books. Okay. Brought forward loss or unabsorbed depreciation, whichever is less as per books of account. Okay, as per books of account for 115 JB. Okay, so out of in this case it says loss is 6 lakhs, unabsorbed depreciation is 4 lakhs. So whichever is less, so I will reduce 4 lakhs. The question says on the debit side I had 10 lakhs. Debit side of P&L indicates loss, out of which 4 lakhs is depreciation. So 6 lakhs is business loss. 6 lakhs is business loss. Am I clear to you? Okay. Book profit. That alone I am closing now. Book profit per 115 JB. Actually, இதுதான் question. Okay, the total income I am computing just to make us more clear. Correct, right? 14 lakhs is right. Okay. Now I'm progressing. Okay. Business income Now my concentration is on the normal column. Business income 12 lakh 5,000. Business income 12 lakh 5,000. LTCG, LTCG, the question says 3 lakhs, but exemption under section 54 EC. But 1 lakh is only for listed shares on which STT is paid. Exemption under 54 EC. So it is nil. Okay, in exam, if they ask you 115 JB, do that only. Don't do normal provisions. %25 base tax on normal profits, which is 12 lakh 80,000 into 25%. 15% MAT on book profit, which is nothing but 14 lakhs into 15%. Books as per IT law, not there as per IT law. Only if they give you as per IT law, books might have 10 AA loss, but in income tax law, 10 AA exempt income when it is exempt, loss you cannot carry forward. In this case, normal tax payable. In this case, normal tax payable, no tax credit. But in exam, they only ask you 115 JB, do that only.
Sir, in this question, they have asked MAT.
Yeah, that's what 218, 400 you should say.
Okay, okay. If they ask what will be the final tax paid, then we should say whichever is higher.
Yeah,
And then
yeah, exactly. Clear? Okay. I'm going to the third question now. Viraj Exports Limited, a domestic company, earned 95 lakhs as per P&L after debiting or crediting the following. Items debited, provision for income tax, GST liability, depreciation, interest, reserve on for currency fluctuation, penalty. Okay. Same adjustments only they repeat. Same. It's all examination question. I'm not deviating. items credited, dividend received on investment in Indian companies. When this question came, 1034 was live. So it was taken out. Now it is not. LTCG on sale of rural land. Profit of units located in SEZ. Okay. Agricultural income. Royalty received from patents developed and registered in India. Depreciation as per IT law. Depreciation as per books includes 190 on account of revaluation. Interest on borrowed capital 1 lakh payable to Y, not debited to P&L account. Profit and loss account in balance sheet on the asset side was 470, which includes unabsorbed depreciation. Company is an eligible company assessee as per the provision of 115 BBF. Compute the MAT under 115 JB. Only the question is compute MAT. We are stopping with MAT. Okay. Compute MAT under 115 JB. Please don't look at the screen. Start working to yourself. Only MAT. Only 115 JB and MAT, please. Are we clear? Yeah, I'll do. I'll do. First, I'll compute the tax and then go for the notes. Yeah? No, sorry. Yeah. Sorry. I stand corrected. Royalty taniya 10% போடணும். ஆமாம் taxable madam. அதான் exclude பண்ணிட்டோம் MAT computationல. So we should add that 10%. Twelve lakh 98,960. I'm writing the note for the things which please wait, people are completing. Note, book profit computation under 115 JB is format based. Okay, please understand it is format based. Okay, addition or deletion cannot be made to that format. Okay, cannot be made. If you have an interest which is not recorded, unless you change the books of accounts, you cannot do anything now. Okay, interest on borrowed capital which is omitted to be recorded cannot be adjusted while computing 155 GB. You can do it in the normal computation. There, your space is larger. There is no definition as such. But here, it is definition based. So you cannot make this adjustment. It, yeah. We'll do it. I'll very soon come to that point. His question is if there is an error in books of accounts, which we are aware of that error, which we adjusted in the normal provision, we cannot do it in book profits. We cannot. For book profits, net profit is the basis. If you are, unless you change your net profit, nothing can happen here. Okay, since you are able to understand, I'm doing like this. Examiner, every line item should have a note. Interest not paid within due date. Under section 43B, this will be disallowed under normal computation. Whereas for computing book profits, it is not specifically added back. Hence, it is not disallowed. Like that, penalty, like that, please state the obvious. Okay, okay. As he said, I need not state the obvious in a past context. Mahadev and Sons Limited is a public company whose accounts have been prepared in accordance with Schedule 3. Profit and loss 27 lakhs. The company involved informs the following debit and credit. Net profit, net agriculture income, profit of industrial undertaking covered and qualified under 10AA, amount withdrawn from reserves, LTCG on sale of equity shares on which STT is paid. Yeah. Amount withdrawn from revaluation reserve. Okay. Debit to P&L, expenses relating to 10AA undertaking, the depreciation relating to 2021 brought forward, business loss relating to 2021 brought forward, current year depreciation, interest to bank not paid till the due date of filing returns, provision for unascertained liability, income tax, penalty. Further information, uh, depreciation for the current year includes 5 lakhs towards revaluation of assets, compute the book profits and of the company liable to tax under MAT. Only, not even compute MAT, compute book profit. I don't have the answers. I'm also going to do along with you. Please try it out. Only computation of book profit, not even MAT. Online students, give me the answer, please. Only the book profit. No, Ananya. இல்ல இது மாதிரி இந்த ஃபார்மட் ஃபாலோ பண்ணுது அதுல அது நாட் அன் எக்ஸ்பெண்டிச்சர் ஸோ ஆட் இட் பேக் ஷோ இட்ஸ் யா ஐ அண்டர்ஸ்டாண்ட் அது வந்து ஃபார்மட்ல இல்லைன்னு பட் இட் இஸ் நாட் அன் எக்ஸ்பெண்டிச்சர் அதனால நோ சுதா நோ
Sir, depreciation of past years and business loss of past years.
Yeah,
shouldn't we take less?
whichever is less only will be reduced. So I'm adding back and reducing whichever is less. 29 lakhs. Okay.
Sir, why are we adding that IT interest, sir? It is in the nature of interest, no, sir. Why aren't we adding it back,
Any
sir?
income tax, any format of income tax will be disallowed. It can be income tax, provision for income tax, advance tax, interest on income tax, anything will be disallowed.
So interest for not filing a return of interest, that will not be disallowed, sir?
Interest for not filing return of income, interest for not paying advance tax, everything will be disallowed.
Okay, sir.
Shall I? Shall I? Okay. Okay. Next question I'm not doing. That's also a simple question like this. Since exam questions I have consolidated, so you try question number 5 later. Same type. So I can go to question number 6. Question number 6. A domestic company has an undertaking newly established for export of computer software in a free trade zone, the profit of which has been merged in the net profit. Furnishes the following particulars. Seeks your opinion on application of 115 JB. You are required to compute the total income and the tax payable. Net profit as per Schedule 3. Credit side, dividend income, excess realized on sale of land, net profit of the undertaking for export of computer software in SEZ, eligible for 50% under 10AA. Debits, depreciation on straight line basis, provision for loss of subsidiary. Other information, depreciation as per IT law, capital gains computed as per IT law, losses brought forward as per books as well as income tax law, business loss, unabsorbed depreciation. The company has represented to you that the excess realized on sale of land cannot form part of book profit from the for section 115 GB. How will you deal with this issue? Well, this will be a popular statement everywhere. Company is saying that it is LTCG, so it cannot form part of book profit. But our answer always is book profit is a format. Unless specific exclusions are there, we cannot exclude. So this cannot be excluded. The company's contention is not right. Okay, right? Read through. I'm going to work out very patiently in the style of examination. Step 1 will be computation of normal income. Step 1 will be computation of normal income. Dividend income taxable under IFOS 20 lakhs. Profit on sale of land 30 lakhs. Depreciation as per books 1 crore. Provision for loss of subsidiary 60 lakhs. Is it 1 crore 60 lakhs? Are we hitting at it? I'm going for computation of total income, PGBP. Under that, business loss or business income 160 less brought for less sorry exemption under 10 AA exemption under 10 AA 50% of 1 crore because probably is in the later 5 years. Okay. Okay. So income before set off is 1 crore 10 lakhs. Income before set off is 1 crore 10 lakhs less brought forward business loss 50 lakhs. Forty lakhs. Are we clear? Okay. Step 2 is computation of book profits. Depreciation. There is no revaluation. Add பண்ணி less பண்ணி. When the question came, there were no two rates of 30%, 25% for companies. It was only 30%. There was no 25%. So I'm working out under 30%. I'm working out under 30% because when the question came, it was so. Will surcharge come for book while computing MAT? Yes, because book profit has exceeded 1 crore. Okay, so add surcharge at the rate of 5%, 7%, yeah, 7, yeah, 2, 5. Surcharge at the surcharge at the rate of 7% since the book profit has exceeded rupees 1 crore. So this Shall we? Okay. Company is liable to pay tax either at normal rates or MAT, whichever is higher. So in this case, we are paying as per MAT. Since MAT is payable, the difference between MAT and normal tax is allowed as carry forward of MAT credit under 115 JAA. Are we clear? Are we clear? Always step one, work out normal. Step two, compute MAT and then compute book profit and then the taxation and then the conclusion. That is how, if there is a comprehensive question, that's how it has to be answered. Okay. Why did we charge surcharge? Why did we put surcharge? It is more than 1 crore. Suppose, for example, suppose if there is an math computation, suppose 35 lakh 5,230. Am I supposed to pay advance tax also for this? And if I don't pay advance tax or if I have not paid, will 234B and 234C be payable? Yeah. Good. I appreciate that you remember something I told in the class, but wrongly you are remembering. நான் presumptive taxationக்கு சொன்னதை படவா மேட்டுக்கு ஞாபகம் வச்சிடுறாதீங்க. Okay. So suppose my question to you is, am I liable to pay advance tax? Am I liable under 234BC?
I don't think so, sir.
Okay. Yes is the answer. One is I don't think so. The answer is yes. All other provisions of the law, 115 JBக்கு ஒரு லைன் இருக்கும். All other provisions of the law will apply as it is. all other provisions of the law will apply as it is. So you are supposed to, when you are able to predict your income and pay advance tax, you should be able to predict. You have made that prediction on some basis. You should be able to predict your MAT, and if MAT is going to be higher, you have to pay. Otherwise, 234B, 234C interest is applicable. Okay, about this interest computation, we will see in advanced tax chapter. Now I'm telling you that all other provisions of the law, that's why we did surcharge. MAT just gave you the rate. Why did you do surcharge? All other provisions of the law will apply. Okay, I want the class to understand this. All other provisions of the law will apply. So 234B interest can be computed. Okay, 1 minute. Yeah. Rolta India Limited. Rolta India Limited. Can interest under 234B and C be levied where a company is assessed on the basis of book profit? Specific provision clarify that all other provisions of income tax shall apply to every year C. Therefore, held 234B and C shall be payable on the failure of the company to pay advance tax or installments of advance tax, even as per 115 JB Rolta India case law. What is the specific provision? Okay, it clarifies that all other provisions of the Income Tax Act shall be applicable to all assessees. Am I clear to you? That's why in the previous question we did, our friend was correcting me, 115 BBF we did 10% because all other provisions of the law will be applicable. This led to one other very, very interesting, still a disputable case law of metal chromium platers. Okay, first question I did not take it up because I want to introduce you to math in that question. Now I am able to see that you are able to understand, so I am progressing. On the credit side of my P&L, I have LTCG. Will that be taken out while computing book profit? No, because the format does not say. But I have invested that LTCG in 54 EC bonds. 54 EC bonds I have invested, which will not be debited. It's an investment. So obviously the debit I have P&L. When I am computing the normal provisions, I would have excluded the LTCG and brought it to the capital gains chapter, claimed 54 EC. If a metal chromium contended that, look at the wordings of the law, all other provisions will be applicable to me. So while computing MAT also, you have included it as capital gain. It is there in the P&L. Reduce 54 EC also. It cannot be format based. Madras High Court gave a favorable judgment to metal chromium, saying yes, he is right. You have said all other provisions are applicable, so you should consider it. The issue under consideration is whether, while determining the book profit for the purpose of 115 JB, LTCG included in the statement of P&L can be excluded since the same is under 54 EC. Capital gains, which forms of part of the net profit in the statement of P&L, in respect of which exemption under 54 EC is applicable, while computing the total income under normal, should not be taken into account. That is, the capital gain should not be taken into, not 54 EC. Capital gains you should not take it because it is claimable under 54 EC. So in total, this judgment says 54 EC should be given. Okay. நம்ம இன்ஸ்டியூட்க்கு வந்து 10 எரியுது அப்படி Okay, our institute has given this, okay, it's a big circular, okay, where the institute has explained, no, he cannot give. The court is wrong. That's what our institute is saying. Circular of CBDT. அதுக்கப்புறம் interpretation of circular by our institute. Circular. It may be emphasized that the new provisions of 115 JB is a self-contained. Subsection 1 lays down the manner of computation. 2 provides for computation. 5 specifies provide all other provisions of the act shall apply to every assay being a company mentioned in this section. In other words, except for substitution of tax payable under the provision and the manner of computation of provision book profit, all the provisions of tax, including provisions relating to charges, definition, recovery, payment, assessment would apply to this. Okay, this is what is the law. Okay. Institute clarification. Sir, அங்கிருந்தா எடுத்து போட்டிருக்கேன் சார். Suggested answers இல்ல மெட்டீரியல் நேம் தான் எடுத்து போட்டேன். Okay. The CBDT clarifies that except for tax payable under the provision and manner of computation, all provisions of charge, recovery, etc. would apply. Therefore, book profit for levy of MAT has to be computed in the manner laid down under 115 JB, that is by making the adjustment as specified in the explanation contained therein in the net profit. This implies that exemptions and deductions available under normal provision would not be available under 115 JB. For example, income under 10, 11, 12 of the income have to be deducted while computing book profit of for levy of MAT if credited to statement of P&L by virtue of etc. Therefore, it appears that the intent of subsection 5 is to make applicable other provisions like payment of advance tax, interest under 234 BC, return filing, penal and prosecution provision, etc. to a case where tax is computed. The Madras High Court has, however, in this case interpreted 115 JB to also permit adjustment for exemption of 54 EC while computing MAT, even though the same is not expressly provided for in the explanation of 115 JB. So our institute material, by interpreting that, says no, this is applicable. 115 JB 5 is only applicable for tax payment provisions. Interest payment charging provisions is applicable. Computation it is not applicable. That wordings, all other provisions of the law will apply is only for charging provision and not for computation provision. Computation provision you should not. Okay. In fact, in the old material, they were using verbatim words. The High Court seems to have ignored the circular. And the marla use panniranga word. Okay, இப்போ கொஞ்சம் soft ஆயிருக்காங்க. Okay, the Madras High Court in this case interpreted. Okay, so institute has not concluded. சரி, அதுக்கப்புறம் படிச்சா அந்த பேஜ் ஃபுல் ஸ்டாப் வச்சு மூடிட்டாங்க புக்க. ஓகே, சரிடா, நீங்க என்ன சொல்ல வரீங்க? We don't know. Manjula Jesha Mari, எதுக்கு வம்பு? Okay, so in our forthcoming questions, we are going to state this case law. Okay, metal chroming. Personally, I think Madras High Court is partially right, but partially wrong. Why I am saying partially right, partially wrong is, in the case தப்பாதா இருக்கணும் அப்படின்றது why I am certain. Because the computation of LTCG is different from profit on sale of land. Books land will not be indexed the cost of acquisition, either original cost or revalued cost values. And if you sell it at a different value, the profit or loss arises. Suppose profit, that is different from when it comes to income tax law, the way we are computing is different. அங்க எக்ஸ்க்ளூட் பண்ணிட்டு. So இப்போ ஹைகோர்ட் ஜட்ஜ்மெண்ட்னா ஒரு 12 years back, 15 years back இருக்கணும் இந்த கேஸ்ல. Okay, the facts of the case, etc. So we are not going to change our working, but we are going to specify as a note. However, in metal chromium case, it has been mentioned that 54 EC can be claimed while computing book profit also. Okay. If at all there is in the new material which is yet to be released, if there is further clarity, we will take that. Okay. Otherwise, I don't think there will be further clarity. But there are only 2 case laws for assessment of companies. ரெண்டு தான், மிச்சம் எல்லாம் PGBP தான் பராஜா. Okay. One is rolled, ரெண்டுமே 115 JB. Rolta India, where they said you should charge 234 BC because all other provisions of the law apply. Metal chromium, court said yes you should, but institute says no, they have ignored some provisions of the law. Okay, but it's a high court judgment only, not a Supreme Court judgment. So we are going to continue to specify that you should tell to the examiner, I know this case, I have read this case, but at the same time not give its impact. Okay. Hyperlimited engaged in diversified activities earned 1425 after debiting or crediting the following: provision for loss of subsidiary, sales tax demand, now it should be GST demand, okay, paid before due date. Wealth tax, it's not there now anyhow. Wealth tax will not be disallowed under 115 JB computation. Why? Because the law has said income tax. Provision for income tax, advance tax, etc. It's a definition. Provision for income tax, expenses on sale or purchase of shares, depreciation, interest on deposit credited to buyer for advance received on which tax is deposited late. Items credited to P&L, LTCG on equity shares on which STT is paid, a dividend from UTI. The company provides the following additional information. Depreciation includes 150 on revaluation, 280 as per income tax law, brought forward loss and unabsorbed depreciation as per books, as per IT law. Compute the total income of the company for the assessment year, giving reasons for treatment of items. Examine the applicability of 115 JB and compute the book profit and tax credit to be carried forward. Both normal provision as per. Go ahead, please. Go ahead. Normal provision. First, I am going as per normal provision. 1425, loss of subsidiary. Sales tax is paid before due date, nothing to disallow. Bill tax, income tax, expenses on sale of shares, depreciation, 30% of further. It should be paid 1 month before. Okay. Less LTCG, less allowable depreciation. I'm getting a business income of 1377 before set off. This is computation of total income. Business income as computed less. Yeah, sure. Which one? Add 70, 90, 105, 15, 360 and 27. Less 360, 75 and 280. Shall I? Okay. This is my tax computation of total income, 9,82,000. 9,82,000. This is the tax for that you would have computed last. Okay. Okay. This is my 115 JB computation. No, no, no. Ascertained than other. I know what is the liability. Unascertained is provision for bad and doubtful debts. 2% of debtors. That is capital gains. Not 112A. Yeah, because it is less than 15%. It's my interpretation. Maybe இது வந்து இந்த கொஸ்டின் வரும்போது அந்த 112 எல்லாம் கிடையாதுப்பா. 1038ல இதெல்லாம் எக்ஸப்ட். உங்களோட மெட்டீரியல்ல பாத்தீங்கன்னா 1038ல எக்ஸப்ட். அந்த வருஷம் இட்ஸ் எக்ஸப்ட். Now it is taxable at the rate 10%. You cannot go and tell them pay 10% or 15% when it is taxable at 10%. Okay, okay, yeah. Now, previously, Hari, it was exempt under 10, that UTI, 10, 34 and the dividend order. Now it is taxable.
Yeah, other than that, everything is right, sir.
Good.
Mistake fund.
You're getting it from monitor. ஆமா ஆகும் அப்படின்றது தான் என்னோட ஒப்பீனியன். because that is 1 lakh up to 1 lakh nil, more than 1 lakh 10%. So it's more of rate of tax Maria, not as an 54 exemption. 10 lay on them. But again, this is interpretation. You want me to scroll up or something? Which what? Which part? The next question, question number 8. Question number 8. Actually, 60% of this question we worked out in PGBP chapter. Okay, I'll read the question. Net profit of a company for the year ended after debiting the following items are were 9 lakhs. Old building taken on lease and a new building was set up for 10 lakhs, written off as revenue expenditure, the lessor permitted continuation of lease. 1 lakh was paid as an annual fee for technical service for foreign collaborator under an agreement. Tax is omitted to be deducted. However, the same was deducted in May 22. Company collected 3 lakhs from its customer by way of VAT and has remitted it to the state government in due time. On the levy being challenged by the High Court held the collection as illegal and the state government refunded the company. Land development charges on allotment of commercial plot which should be capitalized. Company issued in the year bonus shares to its shareholder and for the purpose of enhancing the authorized capital. Fees of 1.5 lakhs were paid to registrar of companies in this regard. These have been written off in the accounts. Company paid 70,000 as interest on deposit to some non-resident buyers on advance received. No tax was deducted. Overdraft interest 40,000 paid to enable the company to pay its dues. Opening and closing stock were undervalued by 10% on cost. Some investments held by the company which has to be depreciated by 4.8 lakhs due to government directive. Okay. We have done this question in PGBP chapter. Okay. This is the one. 9 lakhs. Question number 42 of PGBP. Question number 42 of PGBP. 9 lakhs. Cost of building less depreciation 10%. Amount paid to foreign technical collaborator without deducting tax at source. VAT refunded. This will be treated as income. Okay, so no adjustment. Land development charges at the time of allotment, acquisition. Expenses on bonus shares. interest without deducting tax at source, 100% disallowed. Okay. ICDS 2 says it should be valued at cost or market price. So we are making the adjustment. Interest on loan taken for payment of income tax disallowed as it takes the character of interest on income tax. Provision for diminution in the value of contingent. So totally we arrived at a business income of 26 lakh 43,000. We have worked out. From here only we are going to pick and work it out. Okay. From here only we are going to pick and work it out. So I will copy this answer to the fresh assessment sheet. 42. Huh? Refer page question solution number 42. Normal business income. This amount you write it. பிஜிபிபி முன்னாடியே போட்டோம்டா ராஜா. நீ திருப்புற இந்த பக்கம் திருப்புற. பிஜிபிபி டா ராஜா. ஆர்டர்னா கூட கேபிட்டல் கெயின்ஸ்க்கு அப்புறம் எப்படி பிஜிபிபி வரும்? இருக்கா? இருக்கா? ஆமா. அந்த பேஜுக்கு ஏதாவது ஃப்ளாப் மாதிரி ஏதாவது வச்சு அதை ரெஃபர் பண்ணிடு அந்த பேஜ். ஓகே. Anyhow, the Excel will be with you if you want to refer. 26 lakhs 43,000. Okay. So I will also write in our Excel sheet so that it's clear to you. Okay. $42 then. 26 lakhs 43,000. Okay. Now I am further reading the question. Now only the math part comes, my dear friends. Math part comes now only. So I will further read the question. Balance on 1st April 2021 of the profit and loss account shown separately in the balance sheet was debit of 2 lakhs. So business losses 2 lakhs. The company had the following brought forward loss for tax purpose. Business loss for tax purpose AY 1314, AY 1617. Losses under capital gain AY 1718. Unabsorbed depreciation as per income tax record as well as books of the company 12.5. Calculate the total income for the assessment year. Your answer should clearly indicate the reason. Examine the applicability of 115 JBE to the company for the same year. So we are in the process of computing the total income. In that we computed the business income. There are no other incomes. If you look at the business income, we have not reduced any LTCG or anything. Okay, there are no other items. You can read the question quickly. There are no other items, no other incomes. How much is the brought forward business loss? How much is the brought forward business loss? As per income tax. First I am doing not 115 JB as per income tax law. So yeah, that's what I want you to understand. With regard to 13-14, that cannot be set off because 8 years is over. 14-15, 15-16, 16-17, 17-18, 18-19, 19-20, 20-21, 21-22. 8 years is over. We are in assessment year 22-23. We are in assessment year 22-23. Okay, right? Examiner should not think that you did not see that line. Examiner should know that you know that provision. So AY 1314, okay, not available for set off as the 8-year period has lapsed. So you cannot set off that, whereas the 16-17 you can set off. Unabsorbed depreciation brought forward 12,50,000. Unabsorbed depreciation brought forward 12,50,000. Are we clear? Okay. I will go for computation of book profit. Huh? அப்படியா? Okay. Because மாத்த சொன்ன question numbers ஒருத்தரை விட்டு ஏதாவது தப்பு பண்ணிருப்பேன். It's 40. Yeah. No. Book profit, net profit as per P&L account, 9 lakhs. Tell me the adjustments. Tell me the adjustments. Tell me the adjustments. Interest on income tax. இருக்கான்னு? That is also not correct. Diminution in the value of investment. Diminution in the value of investment is on. Please remember, all of us in the classroom, okay? First thing cannot be adjusted. You can maximum write a note saying that the balance sheet is not as per accounting standards. That can be a note. But when it comes to 115 JB, the format is defined. You cannot add or reduce an item, be it for the stock, it is not as per accounting standards, be it a capital expenditure being shared, it is not but you cannot make an adjustment. First, no adjustment. Second, no adjustment. Third, no adjustment. Fourth, no adjustment. Fifth, bonus issue, no adjustment. Sixth, tax not deducted at source, no adjustment. Overdraft interest, no adjustment. Okay, opening and closing stock, no adjustment. Only adjustment is diminution in the value of investment. Huh? Okay, என்னாச்சு அது பரவாயில்லப்பா, that we don't dispute, but only to adjustment. Okay, why I am very specifically taking such a old question and doing is, examல நமக்கு வந்து ஒரு டென்ஷனே வந்துரும். What building adjust பண்ணல, என்ன பேப்பரை கீச்சு போட்டுறலாம்ன்ற அளவுக்கு தோணும். Okay, because in examination tension you will have that, why there is no adjustment, but actually no adjustment. The truth is, you can after all write a note that the balance sheet is not as per accounting standards. That's all we have the option. We cannot reject the books. Only assessing officer can do. So I reject the books of accounts. Take 25%. So as per normal provision, this is higher. So I will pay only as per normal provision. clear? Okay. Okay. So this is with regard. So the major question is PGBP only. That's why calculate the income treating individual items. This is a supplementary question. 16 marks. They gave 12 for this, 4 for this. And the split of Markley, you will know that 115 JB is very lesser to work on. Netherlands Oil Corporation, a foreign company engaged in oil and gas in all countries, including India. In respect of its Indian business, the company has prepared the profit and loss account, and such profit and loss account for the year ended shows a net profit of 65 lakh. The net profit of all other countries, that is an irrelevant information. That should not confuse you at all. Okay. Net profit as per Indian operation 65 lakhs. The company informs you that while arriving at the net profit as indicated, their business, the following debits and credits. Credits agriculture income, share of income from a firm, amount transferred from reserves, income from an industrial undertaking covered and qualified under 8IC. Debits, depreciation, interest to financial institution not paid within due date, penalty, proposed dividend, provision for income tax, transfer to reserves, provision for unascertained liability, expenditure. The following additional information: brought forward loss, depreciation, brought forward loss and unabsorbed depreciation as per income tax law. Compute the tax liability. That is the indication that you should do math. You don't have an option but to do math also. Time starts now. This is our normal provision. Okay. As soon as the question comes, as soon as you read the question, if you have underlined foreign company, you will not make small mistakes like tax calculation. Okay. This is our normal calculation, net profit. Okay. Less agree income, which is exempt. Share of profit, which is exempt. Amount withdrawn from reserve, add depreciation, interest not paid within due date, penalty, proposed dividend, provision for tax, transfer to reserve, provision for contingent liability. Okay, and this is the presentation. First, find out business profit, then you should find out brought forward loss, then you should give the gross total income and deduction. Or he said, no, you add back 6, reduce, I mean, add back 5, reduce 6 totally. அப்பனா ரொம்ப தப்பா போயிருக்குமா உனக்கு ஆன்சர் அப்ப 5 ஆட் பண்ணிருப்ப நீ then okay, that's what he said, that's what he said. But deduction is different from exemption. Deduction is 100% of profits. So 25 lakhs is our normal computation, income as per normal computation, and the tax for that is 40%. It's a foreign company, 40% and surcharge. Here is 115 JB computation. Is surcharge? No, sorry, it's no surcharge. It's foreign company, 40% tax. 1 crore exceed agala. 215. Anthony, while you are stuck, Venkatesh, you are getting it. Nara Raja. Huh? No, I want you to make that. There's nothing. I want you to make as many mistakes in the classroom, so that these things doesn't repeat. Yeah, yeah, I know. Everybody would have done that. It is not that if I am sitting there, I would have done that mistake. Because நம்மளுடைய வேகம்ல நம்ம we will maintain அதனால அந்த first line வந்து foreign company அதுக்கப்புறம் எங்கேயுமே வரல. He doesn't celebrate us. He couldn't get the answer. He's not celebrating it. Had he got the answer, he would have taken the chocolate. ரொம்ப வருத்தத்துல இருக்கா. மொத்தம் 3 லைன் தான் ஆன்சர். 30 நிமிஷமா இதை போட்டு இருக்கோம். 4 தப்பு பண்றோம் 3 லைனுக்குன்னு. You can get one when you go. But others will have a small inferiority complex. உனக்கு மாத்திரம் எப்படி நோட் தீர்ந்தது, எனக்கெல்லாம் தீரலையே. அப்படின்னா ஓகே, ஓகே, நிறைய படிக்கிறான். Okay, okay, right.
Can you show the normal tax income?
அவனே கஷ்டப்பட்டு ஒரு நாள் கிளாஸுக்கு வந்திருக்கான். இனிமே அவன் முடிவு பண்ணுவான்.
Sir? Okay. Sir, can you scroll down a bit, sir?
Scroll up, right?
Yeah, down, sir.
That's all, friend.
No, sir, I want to see the tax on normal income.
Yeah, yeah. Sorry, that I have worked up here. The foreign company.
Sir, thank you, sir.
So 40% is the rate of tax.
Okay, sir. Thank you, sir.
Shall I? So 115 JB as a format, how to remember? Okay. If you look at appropriation, there are 6 items. Okay. Reserves, dividend, taxes, deferred taxes. Similarly, the reversal will be for reverse and deferred taxes and reserves. If you look at provisions, there are 3 provisions. Okay. Subsidiary losses, unascertained liabilities, diminution in the value of investment. The reversal is not exactly, but we have written profit on sale of sick industrial undertaking. We have written it there. Then there are 5 exemptions which are taken out, and the expenses or the losses pertaining to that. Exemption under 10, not 10AA, only 10, mainly agricultural income, share of profit of a firm. Okay. some other incomes which are taxable for, which are not taxable, expenses pertaining to that. Share of profit of AOP, share of loss of AOP. 115 BBF income, expenses of 115 BBF and BBG also. Okay, for foreign companies, whatever is the profit, which are taxable at a rate lesser than 15%, similarly. And notional gain on getting real estate shares or units of a trust in exchange of shares on the, so this is the 10 items together. Depreciation we add back, and ignoring the revaluation, depreciation we reduce. Last item as a reduction alone is either the brought forward loss or unabsorbed depreciation, whichever is less as per books. Okay, right? Now I have something to tell you before going to Ind AS. The amendment came first in 2019. That is the time lot of companies were going into what is popularly the NCLT, dissolution process were happening, or insolvency petition, IBR was happening. Similarly, directors of the company, if they are disqualified or for some reason, okay, so came this provision first. Okay, brought forward loss or unabsorbed, brought forward loss, and which means also, not or, and unabsorbed depreciation as per books if the company's application is pending in NCLT or subsidiaries application is pending in NCLT. Okay, if that company's application is pending or their subsidiary company's application is pending, then this will not be taken. Okay, okay, this will not be. So the first thing that came in is the word and is the crucial word. It is not or, it is and, both together, both together. So go back to the format now. Go back to the half a page which you have left in the format. Okay, and on the credit, on the, sorry, accounts nothing credit no on the right hand side, that is the deduction side, write down brought forward loss and unabsorbed depreciation. Normally for a for our accounting understanding, going concern and the or the, where the application is pending for insolvency petition or dissolution of the company, the word or is not there, and. Okay, right? Then came the three things. Subsection 2A, this is up to 2. Subsection 2A, subsection 2B, subsection 2C, which spoke about Ind AS adjustments. Up to subsection 2, it is only about accounting standards alone. Subsection 2A, 2B and 2C spoke about Ind AS adjustments that needs to be made for the book profit. Okay. Ind AS has this particular item called in the financial statement, okay, items that will be reclassified into P&L, items that will not be reclassified into P&L. Repeating, in our Ind AS financials, there are two things: items that will be reclassified to P&L. Second, items that will not be reclassified to P&L. Okay, we are now focusing only on items that will not be reclassified. Items that will be reclassified, somehow it will be classified, leave that. Okay, this is coming under a heading called other comprehensive items. Both it can be income expenditure, so it is known as items. Okay, other comprehensive items which will have this particular. So the adjustments are going to be from the OCI, other comprehensive income. If you look at the Schedule 3 format, or if you look at the format, this will come after net profit. Please understand, I'm taking this time to make you understand something. This will come after net profit, which means it is not debited or credited to the P&L. இது அப்புறம் adjustment வருது. Now I need to make the adjustment. So here income should be added, expenses should be reduced. So far expenses are added. If it is debited to P&L, expenses are added, incomes are reduced wherever it has to be taken out. Now it is not debited or credited to P&L, it is separate items. So my addition will consist of income, my deletion will consist of expenditure. Okay, right. Ind AS adjustments. I have practically, when you see I have given the note, don't worry, I'll tell you where I have given. Okay, subsection 2A, okay, increased, that is add all amounts credited to OCI, other comprehensive income, in the statement of P&L. And the most important is items that will not be reclassified to P&L, because examiner, they will give you two things: items that will be reclassified, forget it. Items that will not be reclassified should only be taken. Am I clear to you? Okay. So in the addition side, okay, income, that is credited in other comprehensive items, which will not be reclassified to P&L. What is the bottom rule of income tax law? That's perfect. However, this will not include revaluation under Ind AS 16, 32 and 109. Under Ind AS 16, 32 and 109 அப்படினா என்னன்னு தெரியுமா? 16 is fixed assets, tangible assets, 32 is intangible assets, 109 is financial instruments. I've given the theory in the okay. However, no adjustment shall be made where the amount credited or debited to OCI is due to revaluation of assets, tangible assets, AS 38, sorry, 32, AS 38, and fair value or gain or loss from investment in equity in accordance with 109. So these three things, revaluation is never a concept. Never a concept. Okay. So, idudia direct opposite. Expenses. Okay, right? ஓகே ராஜா, எனக்கு இந்தியஸ் தெரியாது ராஜா, ஏதோ கொஞ்சம் இது 3 மாதம் தெரிஞ்ச மாதிரி நடிச்சேன், கொஞ்சம் எனக்கு மிச்சப்படி தெரியாது. ஓகே, தெரியாதுப்பா ராஜா, அதெல்லாம் வரும்போது நான் பிராக்டிஸை விட்டு வந்துட்டேன். நீ தனியா நான் ஆபீஸ் ரூம்ல வந்து பாரு. ஓகே ரைட். We'll discuss in days. Okay, right? Next comes subsection 2b. This is only in the case of demerger. This is only in the case of demerger, friends. Whenever there is a demerger, I will take the assets and liabilities in fair valuation. In fair valuation, again, the revaluation aspect has to be removed. The revaluation aspect has to be removed. If you look at 2b, in case of demerger, assets and liabilities of the transferor company should be transferred to the values prevailing the books. This subsection specifies where it is transferred at a different value, it should be ignored. Okay. Okay. Right. Now I am walking into subsection 2c. Subsection 2c. First, let me give you an understanding of subsection 2c before going. Let me give you an understanding. Suppose a company becomes Ind AS compliant in the financial year 2021 or 21-22. Financial year 21-22, you have to adopt Ind AS. But the comparatives will be in AS. Current year it will be in Ind AS. Comparatives will be in AS, which is not possible. So the law says, accounting standard law says, make the change from 1/4/2020, not from only 21-22. Make the change in 2021 also. The of all changes, put it in an account called transition reserve. By transiting from AS to Ind AS. From moving from AS to Ind AS, there is a collective of resources that you should credit it or debit it to transition reserve. Okay. Income tax law says you can claim that transition reserve in 5 years. Okay. 1/5 every year. 1/5 of, understand what is transition reserve, of transition reserve if it is credit. Similarly, 1/5 of transition reserve if it is debit. Transition, it's mandatory. So you have to do it in the transition reserve, all the adjustments. Okay. Now please understand, transition reserve, note மாதிரி எழுதிங்க, not to include securities premium, forex reserve, capital reserve, and revaluation reserve. Okay. So, revaluation. In the case of Ind AS compliant company, the book profit of the year of convergence and each of the following 4 years, 1/5 every year, shall be further increased or decreased as the case may be, 1/5 of transition reserve. In the first year of adoption of Ind AS, the companies would prepare the Ind AS financial of the reporting year, that year, with the comparative financials of the immediate preceding year. As per Ind AS 101, a company would make all the Ind AS adjustment on the opening day of the comparative financial statement in the equity, which is popularly known as transition reserve. However, transition reserve does not include capital, securities premium, revaluation, forex reserve, and of course 1638 and 109. Okay. Okay, so this is the comprehensive format of 115 JB. Okay, as a format, நாம எழுதின formatலயே நான் ஒரு annexure மாதிரி உங்களுக்கு I have given it in the material. Okay, அது முதல்லயே சொல்லியிருந்தா நாங்க எழுதி இருக்க மாட்டோம்னு சொல்லாதீங்க. Okay, so I have given it to you as an annexure. Okay, so that you are understanding how it is being done. Okay, right? I stop here, my dear friends. The class. Meet you tomorrow. Tomorrow morning, Ind AS we will complete and optional tax return we will complete. Then go for assessment of companies, which is PGB. Okay. Meet you tomorrow morning at 6 o'clock. All the best, friends.